Hello and welcome. The COVID-19 pandemic has accelerated FinTech's global growth, with India at the forefront. Amidst this transformation, the Central Bank, Reserve Bank of India, is vigilant about safeguarding consumer interests, ensuring financial stability, and mitigating risks relating to cybersecurity and fraud. Today, we explore the art of balancing foresight, vigilance, and agility in risk management. How can organizations strategically leverage risk management for a competitive edge? To delve into the secrets of success in this dynamic landscape with specific reference to financial services and FinTechs, we have with us Vivek Veda, co-founder and CFO at KreditBee, and Kuntal Sur, partner, risk consulting and leader financial services and treasury risk management at PwC India. Welcome to the show, gentlemen. Vivek, I'll jump right into it with my first question to you. The financial sector, particularly fintechs, have seen a lot of credit cycles, also a lot of disruptions. As you had COVID, then you have stuff like asset quality problems coming in. There are multiple challenges which keep happening, particularly in the light of post-COVID disruptions. How does that pose a threat to risks for fintechs?
Yeah, sure. So if you look at, let me divide it into two scenarios. One is pre-COVID and post-COVID. Definitely, fintech has seen a good amount of growth pre-COVID era, and then when this COVID came, that was the real test that how the companies are able to sustain this period. Because one way to look at is fintechs generally are doing a small ticket, small tenure loan, and this is one of the risky segments if you look at from a secured lending perspective. Now, the moment COVID happens, there was a complete lockdown. The fintechs have to look at that how this recovery will happen, because the shorter tenure loans, if is not collected on a particular time, they are tend to go into a default or into a slippage. So there, the fintechs have scaled up. There were a lot of innovative methods which come out in terms of the collection practices and so on and so forth. So for example, the good part with the fintech was that they were able to dedicate their collection efforts to a city or to a state where the COVID is not impacted so much, or where the lockdowns were not done. So for example, Maharashtra, we have seen the lockdown coming first. So as a fintech, our all collection efforts were dedicated towards Bangalore or Karnataka for that reason. When Karnataka was into the lockdown, we shift our collection focuses to Maharashtra and so on and so forth. So all these innovative methods, they all came out during the pandemic time. Now, post-pandemic, what we have realized is another situation came in where you have seen a funding winter going on. So a lot of fintech startups have now started talking about the profitability, less burning, how to make a sustainable long-term business models and so on and so forth. So definitely, the post-pandemic things have changed substantially. The companies' risk models have evolved over a period of time. What kind of risk companies are willing to take. All these things have somewhere led to a more robust system evolving and so on and so forth.
But, as the sector itself was coming out of the pandemic, then you have the Russia-Ukraine conflict. So how does that sort of, as you put in place systemic, checks after the COVID pandemic is ebbing, then you have another one. So how does the fintech sector tackle with these repeated disruptions in that?
See, so Russia-Ukraine definitely one of the things which impacted. Another thing I'll say, overall fintech crisis, which came in, a lot of unauthorized, unregulated players came into the market. So the best part is, see, geopolitical risk, fintechs can do limited thing about it. The only thing what one can look at is that there is not a heavy burning which is going through, because you don't know when the fresh funds will come in, because it's a negative sentiments going around. But when it comes to, say, illegal players mushrooming out and all those things, as a large player, as one of the regulated players, what one can do is work with the regulators, work with other government bodies to make sure that this kind of disruption is taken care. So we being one of the largest players, we have worked with the regulators, we have worked with various government officials to make sure that these unauthorized players, before they become large, they are completely taken care. When it comes to an overall geopolitical kind of a thing, what we try to make sure is that yes, the complete profitability, the sustainable long-term business models are in place, so that even if there is a funding winter going on for some prolonged time, you are there for a longer run. The best part here is that in this kind of disruption environments, the people who emerge out to be much stronger, they will have then the complete, money chasing them. Let me put it in that way. Yeah. Then there will be a limited players who all the investors will want to invest in, so and so forth.
That's right. Kuntal, let me ask you to give our viewers a kind of a bird's eye view. You are a consulting firm. You deal with a lot of fintechs like Vivek's company and others. I want you to tell us what are the kind of 3 or 4 key things you are telling the financial services players and the fintechs to be mindful of as the risk environment becomes more and more challenging and unpredictable, really.
So great question. As Vivek was saying that there is a boom period, there is a lull. So the guys who have followed the governance model from the day one, then RBI came in, last 2 years, there are 2 regulations which said, so it differentiates between the child and the grown-up. The grown-up are growing. It starts from the day one, how you typically keep the governance level, how do you allow also with internally to ask questions, challenge your decisions because you are the promoter, but it should not be like, I am taking all decisions. The third is that a lot of this analytics work, you talked about the Ukraine and other challenges, but they have already evolved, they have using analytics to find out if I am a platform, I have 100,000 player today, I am lending say 5 to 10,000, can I upscale them? Who are those key guys? Based on the behavioral pattern, I offered a loan of 500,000, 10,000. So that is where the analytics plays a big role, the data being crunched, regulations being in place, and the governance in set, and also there are credit bureaus which are helping to provide you information about the borrower. It's a thin file, we know that, but analytics plus thin file is something which is helping them to grow.
I'll come to the point of thin file a little later in terms of how it is affecting the risk environment. Vivek, tell me, more and more fintechs like yours and others are now trying to run concentrated verticals. They are focusing on concentrated parts of the credit ecosystem. Do you see this as adding to the risk, or do you see that as something which is actually diversifying the risk? I mean, or rather minimizing the risk in terms of, okay, my risk is limited to this particular vertical. For instance, MSMEs and other areas like that. More and more fintechs are running particular verticals and channels and trying to move ahead on that.
Sure. So see, if you look at India, is a very underserved, underpenetrated credit market. The credit card penetration is around 4-5%. So there is a huge credit demand which people were relying primarily on the traditional sources and so on and so forth. Now there are various ways to work on it. One, you go big bang into the market and say, I will do everything. Now, suppose a fintech like me and I go and say that, okay, I want to give a housing loan. I want to go a four-wheeler loan or something like. It's like going and fighting dinosaur in a Jurassic Park. You can't go and compete with HDFCs of this world. But definitely your niche area that yes, there is some demand which is coming from a mass public, which is unsecured short-term loans or a small SME loan or something, which these guys will not be able to touch upon because somewhere it requires a lot of innovation. It has to be done digital way. These guys are more or less inclined towards doing the work in a traditional way, and that's why they will be willing to give a particular ticket size loan or particular tenure loan. Otherwise, their cost of underwriting, their cost of acquiring customers will not work. So it's better for them to take that part of the loan portfolio. For the one where you have to do a complete digital means, you can give loans on a shorter tenure, shorter term, because you are doing end-to-end things digitally. The cost optimization can be done. There, the fintechs can come into the play. Now, the idea is if you look at the growth of the fintechs also, they start with a particular segment, but as and when their customer profile grows, they also try to divert into the other segment. So for example, when we started with unsecured personal loan. It can be as low as say 5,000 rupees. Now in this journey, when a customer becomes eligible for 50,000 rupees, we upgraded him to 50,000. Then we upgraded him to 2 lakh rupees and 4 lakh rupees. Now if the customer wants to take a loan against property from us and he is comfortable that I am willing to pay something extra because of convenience, why not? We will be offering them those products. So over a period of time, you evolve into the different product portfolio based on your customer need, rather than going out on day one and saying that, okay, I want to do all the products which a bank is doing, because that is not possible. You can't fight with them on the cost of funds. You can't fight with them in terms of the establishment what they have created over n number of years. Another thing which has evolved over a period of time is that banks and fintechs have started partnering, where they know their strength, which is cost of funds, vast network what they have created. They know the strength of the fintechs, which is like onboarding customer digitally, doing underwriting digitally, disbursing loan digitally, and are able to reach customers at every nook and corner, right? So I think the partnership model will evolve over a period of time, rather than one single entity expanding its base across.
No, in fact, that's a very important point. I'll come to the partnership aspect in a little while. Kuntal, from your perspective, this whole business of concentrated risks from fintechs, are you talking to your clients to try and advise them against it, or what are you telling them basically?
So if you look at it, the entire fintech model, it starts with a cluster or geography. And as Vivek explained, they are looking to upgrade one. What also they are doing is that they are looking this at the homogeneous pools within the personal loans, that I have a cluster of say 5,000 rupees ticket size situated in Bangalore. There may be another rural Bangalore. How their behaviors are doing. So there is a constant look at this homogeneous pool, not an individual level, and to share the risk they are doing is jointly they are going with the other NBFCs or the banks, joint lending. They are keeping some, because they have this advantage of originating loan in a cheaper price, which larger bank. So the risk sharing is working out well for the larger banks. They couldn't go to penetrate that level, and they are originating, keeping some part on their book and sharing the risk. So it is working well. So far it is good, but constantly monitoring of the portfolio. And also you have to remember the macros. We are in a great demand boom. We have a last year growth of 7.2% of GDP, which shows the demand side of that constantly growing. So as of now good, but systemic risk or idiosyncratic risk can come. So constantly monitoring these pools is the key for their success.
So essentially what Kuntal is also saying is that tying up with banks, in your case also you have, that is the basic, one of the key elements of your model. Is that a risk diversification or a risk mitigation step also, Vivek? I mean, because obviously the larger portfolios, the going down into deeper parts of India, the geographical risk also is actually taken on by the banks rather than by the fintechs. Do you see that becoming a more and more of a trend going forward?
Yeah, I see. Definitely, it's a diversification of risk. What I will categorize it, and it's a win-win situation for both the parties. So, for example, a large bank, they know that they cannot give a small ticket loan because their underwriting cost and all those things will not be covered. But they don't want to leave that customer segment. A fintech knows that the rate at which the banks can borrow money or can raise money, the fintechs will not be able to do it. Their specialization lies in reaching to the interiors of every corner and then trying to generate the demand from the customer. So it will be a mix of both these models which will work, where the fintechs will act as a sourcing agent and will act somewhere, as the initial risk assessor, and then the banks will come in where they will do the final assessment and start using the fintech platform to disburse the loan. So I think it's a win-win situation which will be there, and it is a partnership model which will come into the picture. You can't expect the bank to take the complete pie. Nowhere in the world, in the lending industry, there is one guy commanding the whole market. So all these players, or all the large players, will coexist, and more or less it's the partnership model which will survive over a period of time.
But even Kuntal, in the fintech space, you have the very large players now, and you have the middle players and the smaller ones. Do you see that as a risk for the smaller players, where more and more consolidation will happen? Some will, by definition, whenever it happens in a big play. Now you have, for instance, Jio coming into the financial services sector in a major way. Okay, we in a huge disruptor kind of a thing, and what happened in the telecom space when they came in. Even the big boys had to really go back to the drawing board and reassess their strategy. opportunities. Do you see there a shakeout in that sense happening in the near future in the fintech and financial services space as well, and that risk for smaller players?
Absolutely. Whenever there's a regulations comes, large players come, there will be a bit of shakeout, which is happening as we speak. Some of the smaller, some of the Chinese apps, as you know, that has gone out because they were not scrupulous. The thing is that, again, the entire business model and how the tech enabled you are doing, their USP lying is the nimbleness. Right. How technology used niche segment, untouched segment is tap it. So as long as they can do it, they can tie up. I'm sure Jio would also like to tie up because it's coming up as a large NBFC. They will be tying up with hundreds of this to make it work. So it's a win-win situation. What you are looking at under-penetrated credit country, and we are getting a penetration. So it's a good, as long as the governance and the regulations which is set up overall at the RBI level, I don't see any challenges.
So what you are saying is essentially what they did in retail with the kiranas, tying up with them rather than challenging and decimating them.
Yes, if there is a complementarity, right? So it complementarity is there, the technology prowess is there. Obviously, there's some strengths. It matches their overall growth to be the number one NBFC. That is the goal they have set it up. It will work out well.
Let's talk a bit, Vivek, about cyber risk. You know, in a fintech space particularly, that is a huge risk. Right. Also, along with that, I would like you to dwell a little bit on this thin file issue, because, you know, we had a full issue, cover story earlier in Business Today, where we talked about BNPL, right. Buy now, pay later, which is a major, and as the festive season comes again, we will see more and more of that, and probably that is happening. There were risks which were flagged off even in the global markets on BNPL. Right. So how do you see all these multiple risks with a thin file and the cyber aspect also, if you can dwell on these two areas a little?
Sure. See, on the thin file, how we look at it is, definitely it's not, a thin file doesn't mean that the customer is more risky. The thin file means that the customer has not taken loan as of now.
If I have not taken a loan,
then you have a thin file, right? Yeah. So you need to take a loan to make your CIBIL score or bureau score grow over a period of time. The problem is it's a chicken and egg problem. If you take a loan, then only your file will become a mature file and banks will come into the picture. Now, banks will come into the picture when you have a good score, right? So somewhere the fintechs are the one who are evaluating this thin file based on various ML, AI and all those things, and are able to convert these customers.
Is that happening a lot, AI and ML use?
Exactly. See, I'll give you some example. We have around 60 million app downloads. I have underwritten around 10 million customers. Out of that, 1 million customers are like thin file customers. Now, this 1 million customers, out of that 90% of the customers or 95% of the customers have a decent bureau score now, and they are eligible to take loans from banks and other large institutions. So definitely they have upscale in the journey. The beauty with the fintech is that they can start with as small as 5,000 or 3,000 rupees loan only, and they want to see how the customer repayment behavior is. If the customer is repaying on time, it's a good customer, and the customer is willing to provide additional data, we will upgrade him to a higher ticket loan. So now two things are happening. One, he is able to get his credit demands with a click of a button. Second, over a period of time, he is able to build his bureau score, and then he will be eligible to take loans from banks and so on and so forth. So definitely, this is a starting point of the journey where fintechs are acting and helping a customer to build the score. Now coming to the cyber security and all those things, see, it has become one of the very challenging thing, and we have seen this data protection bill and everything coming out. So as a fintech, definitely it's an added cost for us, but as a good corporate governance, you have to incur it, right? It will just help you to make your system more robust and help you to run the organization in a much longer run. So for us, we make sure that the data is only available to the system. So what does that mean is no individual has an access to data. All the data is masked. All the data is very well protected. As an added thing, we make sure that there are PwCs of this world or KPMGs of this world who come and do our inspection, regular audits and all those things, because I don't want to have a sleepless night because of some data leak and all those things. Though it's an added cost, but that's the cost of doing business, and that's the cost of creating a large institution over a period of time.
Kuntal, we are coming to the end of our discussion. I want you to give us a bird's eye view again. We started with, giving a larger perspective on the road ahead. Now, there are multiple headwinds which continue to play out. For instance, the Russia-Ukraine war is far from over. The recent G20 also mentioned about on that front. Also, there continue to be interest rate risks, all kinds of headwinds in the financial services space as well, and new players coming in. What is the road ahead, you think, for your clients, and how do you think companies like yours are actually helping them sort of navigate that rocky path?
So Sourav, I'm eternal optimistic. You said some of the risks. I take risk as an opportunity.
Absolutely.
So first of all, the demand part which talked about, India is the only bright spot which is looking at. So demand side is there. Second, if you're talking about the fintechs, they are such a small ticket size and still a small player. They are not getting under the systemic risk side. Maybe some of the larger banks may face that when talking about the international collaboration, cross-border lending, and so on. But untapped demand, thin files we talked about, using of AI ML, which Vivek talked about. Here we are talking about making the process straight through processing. As a person, when Vivek has the data on me, they can offer much more personalized product to me. The fraud analytics. So one point is that I see a lot of use of AI, ML, generative AI for this fraud detection, personalize the loan portfolio, straight through processing. They are all good parts. However, as I said that, it is the regional and very, very concentrated on some of the pockets when the lending comes. What is required? A constant vigil on the portfolio. Any blip in the portfolio that can hamper the overall growth process. Need to have a proper governance place, collection analytics to be in top grade, sharing the risk with the other entities, and overall the RBI guidelines overall, it will make. I'm very optimistic. This is helping us as a economy and able to reach us the $5 trillion economy very soon.
And do you think that despite the funding winter, the funding agencies and investors, global investors, will continue chasing Indian fintechs as they grow in scale and size?
So Sourav, again optimistic. We are hearing the winter long. It is coming to over. Spring is there on the knocking at the door.
You think so?
Yes, and being the bright spot. And also they have also gone through, I don't want to bring in, there are certain startups with the high valuation, they pushed in the money, they have seen the burnout, so they'll be much more prudent. Again, the boys will be the boys, kind of, who is above the head and shoulder the others. There will be funds available and they will grow.
So there's no end to this discussion actually, Vivek and Kuntal, but thank you very much for sharing your thoughts on this very important subject and issue actually.
Thank you, sir.
Thank you.